Welcome to the market's mindset. Most traders think they need more indicators to win. More tools, more confirmation, more charts, more signals. ICT flips that logic on its head. Instead of adding more layers to your charts, ICT removes them. He strips trading down to the core mechanics of why price moves, who moves it, and where it's ultimately going. And that simplicity is exactly how ICT outsmarts 90% of traders. Because while most people are trying to predict direction with lagging indicators, ICT traders are hunting liquidity, timing, and intention. And you don't need a single indicator to do that. Today, let's break down the mindset that makes ICT so different and why it works. Why ICT doesn't need indicators. Indicators are a way for traders to outsource thinking. They're comforting because they provide signals, up arrow, down arrow, green light, red light. But the market isn't built on arrows. It's built on institutional behavior, where they accumulate, where they distribute, where they take losses, where they take profits, and where retail liquidity is sitting. ICT teaches you to look at the market the way the people who move the market look at it. Indicators are built from past data. Liquidity is built from current positioning. There's a big difference. Liquidity tells you what is about to happen. That's why ICT doesn't need a dashboard of indicators to anticipate price. He reads intention, not reaction. The real edge, understanding hunt and target logic. Most retail strategies try to predict, will it go up or down? ICT asks a better question. Who is trapped? And where is the market going to attack them? If you think about it, the entire market is a repeated cycle. Price seeks liquidity. Price releases liquidity. Price reprices to the next pool. It's a hunt. Above highs and below lows, liquidity is waiting. By stops, sell stops, late entries, bad risk management, FOMO trades, tight retail stops. ICT traders don't guess direction, they track liquidity. They know. Price doesn't move randomly, it moves from pool to pool. Once you understand that, the chart becomes simple, cleaner, faster to read, easier to trade. You don't need a trend indicator to tell you what the market wants. You can see where the money is. That's the edge. Time matters more than signals. Another reason ICT outsmarts most traders is timing. Retail traders believe the market is always on, every candle matters, every pullback is a setup. ICT knows that the market only delivers high probability moves at certain times. This is why the 950 expansion, the 1015 reversal, the 1030 continuation, the New York close repricing are so consistent. The market is like a machine. It delivers algorithmic behavior in windows of opportunity. If you understand those windows, you don't need indicators to tell you when the market is ready. Time is the indicator. Narrative over noise. ICT teaches a narrative first. What is the draw on liquidity? Where is the imbalance? Where did displacement happen? Where is price likely seeking? Who is on the wrong side? Once you understand why price should move, you don't need indicators to confirm it. You're reading the story behind the candles, not reacting to the candles themselves. This is what sets ICT traders apart. They're not looking for a pattern, they're looking for a reason, a narrative. If the narrative makes sense, the setup has context. And context is what turns a trade into a high probability opportunity. Why retail traders get outsmarted? Here's the uncomfortable truth. Most traders don't lose because they're stupid. They lose because the market is designed to trick impatient minds. Indicators trigger emotions, overconfidence on a green signal, panic on a cross, FOMO on volume spikes. ICT removes the emotional triggers. No flashing colors, no arrows, no dashboard. It's just price. Pure, unfiltered, intentional. When you remove noise, you remove emotional reactions. Retail gets outsmarted because they are reacting to signals created after the move is already in motion. ICT traders anticipate the move before the signal even appears. That's the difference. The power of simplification. When you take everything off your chart except price, time, liquidity, imbalance, structure, you force yourself to actually learn the market, and that process changes you as a trader. Instead of asking, what indicators should I add? You ask, what behavior am I seeing? Instead of, should I take this trade? You ask, who is about to get stopped out? Those questions lead to better decisions, because they're based on logic, not signals. Final thoughts? ICT isn't magic. It's not a secret code. It's not a cheat system. It's a mindset shift from indicators to intention, from signals to liquidity, from reaction to anticipation, from retail to institutional thinking. And that shift alone is what outsmarts 90% of traders. Because the market doesn't reward the most complicated method. It rewards the one that understands how the market truly operates. Trade narrative, trade liquidity, trade timing. Everything else is noise. Thanks for watching. Please like and subscribe.